most of the stuff we're seeing right now is replacements for long-term care for death benefit, right? A lot of those old whole life policies and ULs have a ton of cash in them. And it's just that no one's really looked at that. And it is a gold mine that a lot of advisors don't even know is in their book of business.
4, 3, 2, 1.
Hey, welcome back to the Ready, Set, Grow podcast. Drew and Chris, your not life insurance beards, because Chris doesn't seem to like that name.
It's a deeply unsettling
However,
term.
That is exactly what we are. We want to talk about year-end planning and just how can you be more engaged with clients here towards the end of the year. September is Life Insurance Awareness Month. November, Long-Term Care Insurance Awareness Month. So a couple of opportunities, I think, you can get in front of your clients, bring more value. And one of the things we're going to discuss today is policy review, and really not just you need to get in front of clients and make sure that they've got a policy or still meeting their needs, but we want to dig a little bit deeper as to why you need to be doing it, and ultimately what are some steps you can take to be better at engaging with your clients as it pertains to policy review. So I'll turn it over to the brains of our operations because I am clearly the looks. Chris?
For those listening at home that cannot see Drew and I, Drew is lying. He is not the looks. I am the looks and the brains.
Well, we can take a poll on that on our YouTube channel for those that watch it there.
Yeah.
Plug. Chris, policy review.
Yeah.
Take us a little walk down that path and why it's, again, we obviously know it's important to meet with clients, but kind of delve a little bit more into, why just more than once a year? Enlighten us, brains, because as I stutter through this, you
got it. Yeah, I should have
clearly
rescued you
showing
a while ago.
I am the looks. Clearly,
yeah, I really should have reeled that one in a little bit faster.
I can't spit it out.
Yeah,
Whatever.
so we all we do here at Impact every day is, how do we give advisors something to go back to their clients with that they need and that they want, right? I mean, we're toiling away every day tirelessly to come up hours and hours being like, what do these clients want? What can our advisors do to help them? And ultimately, we kind of decided to do the subject, like, hey, policy review. And it's something that's, that every single advisor listening to this knows they should be doing and more than likely are doing. Yeah. But I think we can put, to your point, a little bit finer point on it on, the why and, how we can help. Right. But in preparation for this, I did a fair amount of research, and research is, Google searches and going through to several pages of Bing and Google and whatnot.
You are the brains.
I am the brains. And found a couple of pretty interesting stats. So, ultimately, policy review is not just a way to uncover an additional sale or a way to bring additional value by improving your client's situation. It's also an opportunity to build a deeper relationship with that client because ultimately the data backs up clients want to meet with their advisors more often. Some crazy eye-raising things that I learned about retirees in general with how they view financial advisors. And this is, I think, really important for folks that are listening. The number one deal for folks with their relationship with a financial advisor is their number one need or want in that relationship is to be understood. That's it. Number one goal or number one thing they're looking for in financial advisors is someone that understands them and understands their goals, right? You'll notice that that's not performance. Mm-hmm. Number one is not concern for clients with financial advisors is not portfolio performance. It's not product performance. It's actually, does this financial advisor show an interest in knowing me and knowing my goals and working towards those goals together? In fact, performance is number 3. So number one is, knowing my goals. Number two is clear, concise, and constant communication. They want to talk to their financial advisors more. They want to hear from them, right? So how do we help these advisors have something else to go to them with that will keep those clients engaged? And when I was, again, looking through and trying to figure out, okay, what's client retention numbers look like, right? Because at the end of the day, on average, a financial advisor is spending a little over $3,000 in cost to onboard a new client. $3,000, right?
It's a big investment.
Big investment. And the guys listening to this might think to themselves, well, I don't spend $3,000.
Yeah.
They might not, but that's the average, about $3,100 per client. Now, only about $500 of that is hard cost, like doing the direct mail or social media campaigns, radio, TV, all that stuff. 500 or so bucks of that is the hard cost. The other part of that is nurturing that sale with time and wages you might pay to an admin assistant, but that's all money you're investing into that client.
That's right.
So we're out $3,200 per client on average just to onboard them. Now we got to keep them. Now the challenge with that is really pretty interesting. In the first 2 years of an advisor's relationship with any given client, 1 out of every 4 of those clients is going to leave that financial advisor in the first 2 years.
It's a pretty sobering stat, honestly.
Yeah.
I would have never thought that.
Exactly. So if I'm adding 100 clients every year, $3,200 a client, that's over $300,000 in investment I'm putting into those clients. A quarter of those clients are going to leave me within 2 years. So how do we get better at retaining those clients? How do we get better, especially in that first 2 years? So advisors on the phone that have clients that you're in a 2-year or less relationship with, you're still dating.
Yeah.
You are not married. And ultimately, you could do something to piss them off and get them to leave. So one of the things that this became beyond just policy review is, okay, how do we build a deeper relationship with our clients? And so, basically what I think the policy review allows us to do is go back to clients, understand their goals more deeply, communicate with them more consistently and clearly, and ultimately retain them, by building a deeper relationship, right? Now, what the heck does that have to do with life insurance?
Well, what we find oftentimes is, a lot of clients that our advisors meet now have life insurance policies.
Yeah.
A lot of older policies.
Yeah.
We come across whole life policies all the time, older UL policies. And we can have a conversation about those policies probably on another podcast. But, oftentimes the boomer generation did buy into life insurance. They saw the value in it.
Yeah.
But their goals has probably changed.
Yeah, absolutely. I mean, and you hit the nail on the head with baby boomers. They have the largest share of life insurance policies of any generation in the United States. But the other fascinating thing about doing some research on this is finding out that not only do your clients want to meet with you more, they want to hear from you about how you understand their goals. They want to hear, from you proactively rather than reactively. Like if they have a question on their life insurance or their annuity case, they want an advisor that's going to communicate with them about solutions. And one of the things that was really eye-popping to me is even though baby boomers are the largest generation in terms of life insurance ownership, highest percentage of baby boomers own life insurance than any other generation in the United States, they're still between 2023 and 2027, there's $200 billion in life insurance death benefit that's going to lapse or be surrendered every single year for the next 4 years. And what that tells me, when you connect those dots, right? Baby boomers have the most policies. They're in their retirement years. They've bought policies that are 20, 30, 40 years old at this point. They are likely not fitting their needs. So why do they keep it? And that's what I think we're going to see with this lapse problem, or the surrender problem, is that $200 billion is death benefit proceeds and protection that otherwise could be redesigned. Could potentially, with a competent financial advisor, go in, find out what's going on with that policy, prevent that lapse from happening, joining that massive multitude of $200 billion in death benefit every single year that's going away. Prevent our clients from going that way, going down that kind of lemmings falling over the cliff type situation, and actually, giving them a policy, using those policies for something that they do need. To your point, it's all we see all the time, these old whole life policies, these old ULs that are just they're not reflecting the client's current need. And it's largely because the client either forgot they had it, they forgot what they bought it for, or they've never met with a financial advisor after they bought it.
Yeah. And oftentimes the advisor has no idea that they even have the policy.
Right.
Yeah. It kind of got swept under the rug. So what are some of the ideas and what are some of the most common transitions for some of these older policies that you kind of see? And obviously I'm seeing it as well, but what are some of the ways in which, again, other than just reviewing them, hey, here's a policy with a $250,000 death benefit, you got some cash, thumbs up. What are some ways in which these are being transitioned into something more, maybe more meaningful or more goal attaining for clients now?
Right. So, a lot of cases right now, we're seeing a large push in the protection market. Yeah. Right. I think advisors on the call will be interested to hear that we're seeing a spike in legacy-focused business. And I think that is part us as a firm teaching that protection story. Yeah. But the other side is just generally, folks are looking for that protection. Folks are looking for protection in the form of death benefit or in the form of long-term care. So a lot of the cases we're doing 1035 rolls from these old whole life and UL policies that are collapsing under their own weight, or they no longer serve and reflect the current purpose and goals of that client. And again, it goes back to, are we listening to our clients? Mm-hmm. Are we actually communicating that we understand their goals? Because that's what they want from us. And so being able to review that policy, provide them something that does reflect those goals, again, goes back to delivering client value, generating referrals, generating a better, deeper relationship with current clients. There's a ton of benefits there. Plus, we're saving revenue loss from that onboarding cost,
which is important for advisors. Absolutely.
Right. So, most of the stuff we're seeing right now is replacements for long-term care for death benefit, right? A lot of those old whole life policies and ULs have a ton of cash in them. Yep. And it's just that no one's really looked at that. And it is a gold mine that a lot of advisors don't even know is in their book of business.
Yeah. And clients don't need the cash for income purposes.
Yeah.
Some of these policies, it's actually pretty difficult to get the money out.
Yeah.
So how can we utilize that money to be something that's more meaningful? And that protection sale has been huge. Long-term care conversation, which is one we're having more now probably than ever before.
Yeah.
Is a huge opportunity. So the importance is just, we can't stress it enough.
Well, you were talking about when we were on our way in here about some case. Didn't the guy have like 11 whole life policies?
11 with.
Should we say the carrier's name?
Are
we
don't
allowed
have
to say that? We should probably not.
Yeah, just know that it is
large.
It is a large,
very
carrier.
large.
Yeah,
from
11
a certain region,
but 11 policies, and
dude,
the client thinks that it meets the needs in terms of death benefit, but what he doesn't realize is that He just wanted to protect his wife if he was gone.
Yeah.
But what the advisor through a meeting with him, was able to uncover was their house was paid off.
Mm-hmm.
The Social Security income that they bring in per month was more than what their expenditures were. They had $800,000 still in investable assets that were, that are growing at 5 to 6%. So did he need that much life insurance? With the amount he had, the short answer is no. And just peeling off a portion of the cash value allowed us an opportunity to get a long-term care policy to cover he and his wife. And there's still plenty of death benefit left over. We just peeled off a third. So, and
how much was that in over the 11 policies? How much cash value was in there?
He had $780,000 of cash. Isn't that crazy? So when he graduated from college, he had several friends that went into the business, and he bought multiple policies from like each of them almost as a favor. And it's kind of funny because it's like, here we are, 40 years later, and he's got, almost $1 million of cash. So good for him for like being a great friend and kind of helping him.
That's
get
a homie.
there. It
As
is.
the kids say,
it
that
really
is a homie. Yeah.
But like in hindsight now, it's like, man, like look at all the great things he can do with this cash value when income isn't a need for him. Here's some other ways in which he can bless himself and his wife, while they're still alive, but also still be a blessing for her and his and their children for when he's not.
Yeah.
So, but this advisor was very diligent about meeting with this client, over communicating with them. Right. I don't think he necessarily understood the goals initially. I think he had to kind of help push this client to, hey, have you thought about this? Because we may need to make it one of your goals. And I think that's something that is probably part of the conversation too, which is their goals may not cover everything that we know that they're going to have to face in their retirement years. So sometimes you have to kind of help them add an additional goal if it makes sense.
Yeah. And I mean, that's kind of, with whole life, specifically with certain carriers, I mean, to your point about, hey, it's hard getting that money out.
Yep.
With these older policies, if these clients want to take a tax-free distribution from that cash value they've worked hard to build over time, good luck.
Yep.
It's going to be really tough. So there might even be, beyond the protection and the long-term care stuff, which, I mean, that's what you just shared wasn't like, it just sounds like a slam dunk.
Mm-hmm.
So any advisor that heard that story, I hope would say, you know what, maybe I should crack my book open and really start integrating the policy review as part of my process.
Yep.
I mean, that's kind of why we're talking about it at end of year, right? Is, how do we either start during this period where in September we're having Life Insurance Awareness Month, November's Long-Term Care Awareness Month. We have a ton of messaging out there in general between now and the end of the year. And, if we have some downtime, maybe we start actually reaching out to current clients, right?
That's the best place to start.
Right, exactly. And with, with those whole life policies and even ULs, I mean, old ULs is a scary, kind of book of business. Those interest sensitive policies that were written in the 80s and 90s. Now the interest rate environment is totally different. 88% of those policies are going to lapse.
Yeah.
So, that is a huge amount of money that is wasted by clients. And beyond providing them new solutions that are going to help, kind of meet their goals now in a more meaningful way, we're also going to help them, in my view, save the money they already put into the dang thing to begin with.
And I think that's a big part of it too, right? Like no one wants to invest and then it just be gone.
Yeah.
Right? Like to have nothing to show for it's a very frustrating experience.
Yeah. So I think this allows us to have like a really positive interaction with clients, right? Build that relationship, especially in that first 2 years where it's essential. We are being hands-on. We are being communicative. We are understanding their goals. But, I guess guys are probably asking, okay, well, how can you help, right? Like what has Impact done to help with this process, make it easier on me? What, I've got enough stuff on my plate already. You're saying I got to add something else. So what do we got for them?
Yeah. So, I mean, ultimately, we do want to add something to your plate, right? But you got to be doing policy reviews. Number one, we do have a policy review approach letter as well as a policy review questionnaire. Think of it as a realignment of your goals, so to speak.
Yeah.
Resources that we can give to you immediately. We have
Mm-hmm.
approach letters. We have client-facing brochures, educational materials, anything that's really going to really just take the work off of you because we've already done it.
Yeah.
Right. You just got to put the effort into putting in the client's hands or putting your office to work in setting up these opportunities, setting up these meetings. Again, being over communicative.
Yeah.
You have the ability to generate the opportunity. So yeah, you can use our resources right now that are already tailor-made for the policy review process. So reach out to us. Like that's what we're here for. Use us as much as possible to kind of generate more opportunities.
Yeah. I mean, beyond the tools we have that are client facing that are meant to make it easier to start that conversation, it all comes down to talk track and how you close.
Yep.
And thankfully, with working with hundreds of financial advisors across the country, we know the talk tracks at work. So I encourage any advisor that's listening to this, say, don't be intimidated by what you don't know. Be really encouraged by what we do know.
Yeah.
Right. And I think that, they can lean on us as an extension of their practice simply by, okay, here's my clients. You might even have that in your book of business already. You might already know generally what life insurance policies are available, but I'd encourage advisors listening to this to give either of us a call to go ahead and start that conversation now and really get those talking points down about what the client currently has and what we can do for them.
Yeah. They're probably listening to this, and I'd be willing to bet that there's probably 3 or 4 clients that are going to automatically pop in their mind.
Yeah.
That they have remembered from other meetings.
Yeah.
And they remember they have life insurance.
Yeah.
And those will be the first ones that they reach out to. And generally all it takes is one, and then you kind of get excited about it.
Yeah.
And then one kind of creates that domino effect of really providing some additional value. So yeah, please reach out to Chris and I. We have the resources to help you out, not only from marketing, but also just the talk track. We want to help you continue to grow your practice, and the last quarter of the year is a great opportunity to do that. So for more tips and tricks with your practice, please make sure you check out our YouTube page for Impact Partnership. Subscribe, like, all that good stuff.
Hit the bell icon.
The bell icon. I still don't know what that is.
It's a thing where I'm not really sure what
But
it
it
is.
works.
Does it notify people?
I don't know. That's what I just said. I don't know what it is.
Well, all right.
The Ready, Set, Grow podcast. You can pick up a lot of great information wherever you get your podcasts. Listen to it. Please listen to it. And again, if you're watching us on YouTube, like and subscribe. Thank you so much, and we'll see you next time.